Imagine a young trader. He just opened his first trading account. He's excited. He watched many videos. He saw screenshots of profits. He believes this is his opportunity. He thinks, this is my way to financial freedom. This is my chance to change my life. I just need the right strategy. He deposits money. He feels powerful. He feels ready. But he does not know something important. The market does not care about his excitement. The market does not care about his dreams. The market only reacts to discipline. And this is where most traders begin to fail. In the first week, he wins. Small wins, but they feel big. His account grows. He feels smart. He feels talented. He feels like he understands the market. He tells himself, I knew I could do this. This is easy. Why do people say trading is hard? But here is the truth. The market sometimes rewards beginners, not because they are skilled, but because they are lucky. And luck creates a dangerous emotion, overconfidence. Now something changes. He increases his lot size. He risks more money. Why? Because he believes he cannot lose. He stops following strict rules. He enters trades faster. He does not wait for confirmation. He starts trading based on feeling. He thinks, I see it, it will go up. I feel this will move. He is no longer trading a system. He is trading emotions. And emotions are expensive. Then one day, the market moves against him. Hard, fast. His trade goes red. He feels uncomfortable. But he says it will come back. It doesn't. The loss grows. He refuses to close the trade because closing means accepting he was wrong. Finally, stop loss hits. Big loss. His heart beats faster. He feels anger. He feels shock. He feels disbelief. How can this happen? But this is normal. Losses are part of trading. The problem is not the loss. The problem is what happens next. Now emotions take control. He wants his money back immediately. He opens another trade without analysis, without patience, just emotion. The second trade loses. Now he feels fear, but also desperation. He increases position size again. He tells himself, I just need one big win. But trading is not gambling. And the market punishes emotional decisions. Another loss. Now his account is damaged, and his confidence is broken. At this point, he is not thinking clearly. He is not following strategy. He is not managing risk. He is trying to survive. He looks at the chart for hours. He forces trades. He cannot sleep properly. He checks the market constantly. His emotions are controlling him. Fear, greed, anger, hope, and then one final big trade, one emotional decision, one moment of desperation. Account blown. Silence, regret, confusion. He says, trading is a scam. The market is manipulated. My strategy doesn't work. But the real problem was never the strategy. Let me tell you the truth. Most traders do not blow accounts because of bad strategy. They blow accounts because of poor risk management, no discipline, emotional trading, overconfidence, and lack of patience. Trading is 80% psychology, only 20% strategy. You can have the best system in the world, but if you risk too much, break your rules, trade emotionally, chase losses, you will lose every time. Let's talk about the biggest mistake, risk. Many traders risk 5%, 10%, even 20% on one trade. Why? Because they want fast money. But professionals think differently. A professional trader protects capital first. They risk 1% per trade, sometimes even less. They understand something powerful. You cannot control the market, but you can control your risk. If you risk small, you survive longer. If you survive longer, you gain experience. If you gain experience, you improve. But if you risk big, one mistake can destroy everything. Discipline is boring, and that is why most people avoid it. Discipline means waiting for your setup, skipping bad trades, accepting losses calmly, stopping after daily limit, following rules even when emotional. It is not exciting, it does not feel powerful, but it builds consistency. Motivation feels strong, discipline feels strict. Motivation shouts, discipline whispers, and the traders who listen to discipline are the ones who survive. So, how do you avoid blowing your account? First, accept losses. Losses are normal. Second, reduce your risk, protect your capital. Third, create clear rules and follow them no matter what. Fourth, stop trading when emotional. If you feel angry, stop. If you feel desperate, stop. If you feel overconfident, stop. The market will always be there tomorrow. Your capital might not. Professionals do not trade for excitement. They trade for consistency. They think long-term. They do not try to double accounts quickly. They focus on steady growth, slow growth, controlled growth. They understand that trading is not a sprint, it's a marathon, and the goal is survival first, profit second. Now imagine that same trader again, but this time he learns from his mistake. He studies risk management. He controls his lot size. He creates strict rules. He stops trading emotionally, and something changes. His account grows slowly. No big wins, no big losses, just steady progress. He feels calm. He feels in control. He is no longer gambling. He is trading. That's the difference. If you want to succeed in trading, forget fast money. Forget hype. Forget emotional decisions. Focus on discipline, risk management, patience, emotional control. Because the market does not destroy accounts. Traders destroy their own accounts. And the good news? You can choose differently. You can choose discipline. And discipline is what builds real traders.